All right, we'll move on now to the U.S., where the stock index futures are pointing to a relatively flat open after a major bill was approved by Congress. On Wednesday, a major hurdle surrounding overhaul in the U.S. tax code was conquered after House Republicans voted to approve tax reform, consequently meaning that the legislation can be sent to President Donald Trump's desk by Christmas. The overhaul is expected to become law for 2018, with the bill set to cut corporation tax rates while temporarily trimming the tax burden for the majority of people. Moving on, data is set to shake up sentiment on Thursday at 8:30 a.m. Eastern Time. Jobless claims, real gross domestic product data, and the Philadelphia Fed Manufacturing Business Outlook Survey are all due out. These economic batch will be then followed by the Federal Housing Finance Agency House Price Index, due out at 9 a.m. Eastern Time. In earnings, Accenture, CarMax, Paychex, and Nike are all set to report their latest figures during the day. In Asia, market indices lost ground today after U.S. stocks closed mostly flat following the passage of a comprehensive tax bill stateside. Greater China stocks, however, proved to be a brighter spot in the region, with major indices closing higher. Japan's benchmark Nikkei 225 index shared 0.11% to close after the Bank of Japan's held monetary policy steady, a move widely expected by markets. In South Korea, the Kospi saw steeper losses, with the index declining 1.72%. Over in Australia, the ASX 200 edged down by 0.25% to close at 6,060.4, with declines in heavily weighted banking names outpacing gains seen among companies in the natural resources industries. Markets in Greater China bucked the downward trend in the region to notch gains. Hong Kong's Hang Seng Index gained 0.64%. Mainland markets reversed early losses to finish the session higher. The Shanghai Composite advanced 0.4% and the Shenzhen Composite tacked on 0.72%. And back here in Africa, the Nigeria Debt Management Office is listing the $300 million diaspora bond and $3 billion Eurobond on the Nigerian Stock Exchange and the FMDQ OTC Securities Exchange today. The diaspora bond was issued in June, while the $3 billion Eurobonds were issued in November at the international capital market. The DMO explains in a statement that the listing would help increase the number and range of securities available in the domestic capital market. And Angola's Sovereign Wealth Fund made a profit of $40.5 million in the third quarter, attributing it to a good performance in its bonds and securities investment. The fund, which launched in October 2012 and is known by its Portuguese acronym FSDEA, says, however, its total asset value was $5.03 billion at the end of the third quarter, down from $5.05 billion in the second quarter. In a statement, the fund said its investment in bonds and securities had generated a gross margin of $117.5 million in the third quarter. It allocates over a third of its portfolio to treasury bills, high-grade bonds, listed equities, derivatives, currencies and other securities. The remaining two-thirds is committed to alternative or private equity investments in emerging and frontier markets in areas such as infrastructure, including the deep sea port in Cabinda, agriculture, timber and healthcare. And Tanzania says Bharti Airtel Limited's local unit belongs to state-owned Tanzania Telecommunications Company, a claim that sets up an ownership dispute between the government and the Indian phone operator. The president has asked the Finance Minister Philip Mpango to follow up on the claim. His comments follow a 2016 order for telecommunication companies to sell at least a quarter of their units on the local bourse to boost domestic ownership. The Tanzanian operations of Johannesburg-based Vodacom Group Limited became the largest company on the Dar es Salaam Stock Exchange when it raised 476 billion shillings in August. Airtel has yet to list Airtel Tanzania, in which the government has a 40% stake. The company is the country's third largest wireless carrier with 10.6 million voice subscribers as of end of September. And a delegation from Chad and commodities tender Glencore failed to reach a deal to restructure a more than $1 billion oil-backed loan after another round of talks in Paris that ended this week. Glencore loaned the West African country state oil firm SHT about $1.45 billion in 2014 to be repaid with crude oil. The loan was restructured once in 2015 after the crash in global oil prices, but Chad is struggling to repay the debt, and funds from the International Monetary Fund hang upon reaching their terms. Chad began the latest round of discussions with Glencore and other lending banks last week. The two sides previously met in Paris in early November, and Chad's finance minister was sacked the following week. And Algeria's state-owned energy company Sonatrach has signed an agreement with BP and Statoil to produce an additional 11 billion cubic meters of natural gas from its Tinguantorin gas field. The field produces 9 billion cubic meters per year, but more investment is needed to maintain that output beyond 2035. The field has produced 78 BCM of gas, involving an investment of $3.4 billion since opening in 2006. Algeria's annual gas production stands at 94 BCM. We take a quick break, and when we come back, we'll look at global oil market trend and the outlook for 2018. Please stay with us.